Hello, everyone, and welcome to another Altos Trading live strategy session with Jeff Tompkins. This is your host, Richard Van Rich, and I'm here with Craig Warden in chat. Tonight, we have a special guest, fellow Zillionaire, and our good buddy, Daniel Sinning is on with us. So got a lot of great information to go over. Really excited to have you guys with us here tonight. Really excited to hear what Jeff has to say and what special announcements Daniel has on the way. So really glad everyone is here. You'll notice that your microphone is muted. That's so we can all hear Jeff and I talk. If you have any questions at all, you can put those in the Q&A box, and we'll get to those throughout the evening tonight. If you have to hop off for any reason, don't worry. This is recorded and will be available on YouTube tomorrow and on the members area later tonight. Awesome. So if you have any questions about access to Zillion, trade alerts, trade, anything like that, anything account related, email support@altostrading.com, and we'll get to those later tomorrow. Before I bring the guys on, let me read a disclaimer. Trading securities and options involves risk. Part of buying and selling an option, investor must receive a copy of characteristics and risks of standardized options. Investors need a broker to trade securities, and options must meet suitability requirements. Past results are not necessarily indicative of future performance, and performance figures are based on actual trades, including real money results. Due to the time-critical nature of trading, broker fees, and activity of other subscribers, there's no guarantee that subscribers will mirror our performance, and performance numbers shown are based on trades users could enter based on the trade signals. So that being said, let me get over to Jeff. So Jeff, if you're there.
Hey,
there you are.
Got bad lighting in the studio, I guess.
I know, man. It's kind of freaky.
Like I'm in a disco club or something.
I know, it's like a carnival or something.
Yeah, we need some disco music.
No, I was thinking it's like with disco music, what we should do for Daniel is come up with like a song for him, like when Rickles went on Carson.
Oh yeah,
that's what we need for Daniel. So Daniel, we're gonna have to come up with a song for you, like a theme song, so when you come out, everyone knows you're here.
I love it.
It's either going to be David Hasselhoff or Rammstein.
I love it. Du hast.
Love it.
All right. So maybe we should have Daniel sing that song. That's initiation.
That would be awesome. I would pay for that.
All right. Well, yeah, great to have Daniel here. Daniel, if you guys don't know, is our developer of Zillion, the Zillion dashboard, and he's going to cover a few new features of the dashboard and had some member questions there. So we'll talk about those. But we'll start out with our market overview, map out key levels in the market. We've had a lot of consolidation over the last couple of weeks, but the support level on the S&P at 4,100 that we've talked about on our last weekly session is holding. We got positive momentum off that today. So we're just looking for resistance to break on the S&P. So we'll take a look at that. And as I mentioned, Daniel's going to go over our Zillion email alerts, which is a new feature. And a lot of the stuff we're going to cover, if you guys or Zillion members are considering becoming a Zillion member, you can get email alerts for all of our signals. So we'll explain that. And that includes both buy and sell signals. He's going to talk about that and how the process works, and they come in, ahead of time. So they give you up to 3 days of advanced warning before, a potential trigger of an entry price that the algorithm identifies. So he'll discuss that. And then we're going to focus tonight on confirming trend and momentum on longer time frames. So, we do a lot of focus on the daily charts at Altos and me personally in my own trading. But universally applicable. You can apply what we're going to talk about tonight on really any time frame. The key being that you want to use higher time frames to confirm trend and momentum if you're taking a directional trade on any particular time frame. So we'll look more at the weekly and monthly charts tonight, and we'll incorporate that into the ticker roundtable when we open it up for you guys to share any symbols that you want to look at. So get some of those in mind if you don't have any, or jot them down, and we'll get to that tonight and try to leave a little bit more time than we did last week for that. So, okay, so I'm gonna flip off my video and get over to our charts. All right, let me actually refresh. and get over to the S&P. Okay, so as I mentioned, a lot of consolidation over and sideways price action with high volatility. So we're getting very wide intraday ranges on the major indices, and not a lot of directional movement. And that's why we're going to focus tonight on higher time frames, because I can help clarify that. So if you ever see something like we're looking at here, let me get my drawing tool. So when you see like sideways consolidation, that can be difficult for, obviously directional strategies. So often what helps is to go look at higher time frames and use those to get a clearer picture of direction and identify, entries and exits for your directional trades. So a lot of chop right now, and the ranges are between major support and resistance levels. So as we talked about last week, 4,100 is kind of our base, and we're dipping below that on occasionally on intraday, but fortunately, good news is we're closing above it. We've closed above it, I think, since this consolidation occurred, and so we're watching this major pivot point from back in late February, and the move off that occurred in March and into the start of April before the next leg of the sell-off. So that's why this level is significant, and there was price action and significant upward movement off that level back in May of last year as well. So it's a strong one, and that's why we're probably seeing a lot of rejection of that level. But what's making it a bit tricky without a real catalyst to accelerate upward momentum is we've got this strong area of resistance. That's kind of more of the technical resistance around 4160. But even more significant, I think, is up around in the 4200 to 4250 zone. So we've got a lot of overhead resistance to contend with. And you can see, past rejection of that level when the markets are still moving up. And then as the sell-off ensued, and this year, we found support there, but eventually, of course, broke it in February. And so if we can break through, 4150 to 4200, we've still got to get through right around 4250 for this to really, get any legs to the upside. So a bit challenging right now. We are in a red divergence cloud as well in the S&P. So we've actually been in that since November of last year, before the market really turned over. So for the rest of this week, let's watch 4100, see if that holds. I think it has a good chance of holding, but there's a lot of fragility. It's probably largely going to be earnings driven. We're just kind of seeing what's going on with earnings. It seems that the consensus seems to be inflation has kind of peaked, but the Fed's saying they expect it to remain elevated for quite some time and not to come back down all that quickly. So that's a lot of what's holding the market down at the moment and creating this sideways consolidation. So then let's look at the NASDAQ, and we'll look at the Qs, the NASDAQ ETF. And similar picture. So a lot of sideways consolidation last week and into this week, but also off of a strong support level. And we mapped this one out last week, but you can see from back in early March last year, 2021, there was strong support there and huge, move up. It was the kind of that final leg of the bull market. through the end of 21, and then the turnover there, of course, in 2022. But that's why this is so strong. So again, as long as this level can hold a support, and it seems to be, there's potential for a leg higher. Again, what could hold that down are quarterly earnings. I think inflation has largely done its immediate damage to the stock market, but there could be, lingering longer term damage. And I've, talked to some, economists and other experts in stock market experts, and the consensus is, this could take 12 to 24 months to kind of for the dust to settle. So I think we are going to really stay in a bear market for the next year or two, but probably at least through the end of this year. But again, we can get bear market rallies. So even when we're in a bear market, we can get big moves off major support levels, which is why this is so important. So if we can push higher on the NASDAQ, on the Qs, we've got our strongest level of resistance here from which served as has so far really just served as support. So May of last year, and then February, March of this year, we kind of came up and played with that level a few trading days ago, but not quite. So it's a little bit higher up, and we're gonna see more resistance there probably. So if we can break through this level on the Qs, then and get out of this red divergence cloud, I think we can. We have more room to run to the upside before hitting more resistance. So I think there's more room on the NASDAQ than there is on the S&P right now, because the next real major level of resistance that I see is from back in support back in the start of this year on that first leg of the sell-off, major resistance back in February of last year, and more towards the middle of the year. Even we saw some consolidation around this level as well, and since we that last leg of the sell-off, so April, basically start of April into later May, we haven't come back up and broken through that, and then gotten up through this level here that we're really watching closely as resistance. So first we need to get through this first level of resistance, and again we've got some room to run on a upward directional bias there, but then we'll counter this next level of resistance, and that one's going to be much harder to get through. So for now, through the remainder of this week and prior to our next week's Tuesday session, watch the bottom line here for major support, and then these two upper lines for major resistance on the NASDAQ. And then lastly, let's take a look at the VIX.
Hey, Jeff, real quick before you pop off.
Yep.
Chris was wondering, would you consider the recent price action here on the being kind of like a bull flag?
It does kind of look like one. I'm not a big pattern guy because I don't know. I guess I don't find them to be real reliable, but it does kind of resemble one. And certainly the fact that the flag part of the pattern is above that strong support level is promising. But again, we just need to see that. And if you guys attend our sessions on a regular basis, you know that I really emphasize frequency of touch at a resistance or support level. And it doesn't have to be an exact touch, but like the more you see price action within a selected time frame, in this case we're looking at daily time frame, hold a level for support or reject a level for resistance, the stronger that level becomes. And that's good information to have, because if it does end up breaking, well, number one, it's less likely to break the more price holds that level. But if it does, you can expect it generally to be a stronger break. So if it if support holds for like it has here for 7 trading days, like a week, if this eventually breaks, if there's some catalyst that causes that area of demand, there's buying buying power here, or excess demand where people are coming in and buying to keep price above that level. If that collapses, then it tends to collapse harder the more times the level, or even the longer the level's held, regardless of time frame. So this is fractal and can be applied to any other time frame as well, that principle. And same thing with resistance. So a lot of times these, like if you're looking at it as a bull flag, or just simply as consolidation after a down move, when it does eventually break in one direction, it tends to be a stronger move the longer that consolidation occurs. So I think we're going to see probably a pretty big move up or down once these zones break on the major indices, these support and resistance zones. So pretty tight, and we might see it happen this week, but it could continue. But we're going to look at the weekly and monthly charts to get better clarification on that, because that's where I think when you encounter this, like we are right now in the daily charts, you can really get a lot more clarity on higher time frames. And a lot of people don't really think of that. They're like, there's a lot of chop going on right now on, let's say you're trading an hourly chart. There's so much chop, it's just moving sideways. I can't figure out which way it wants to go. And often when you encounter that difficulty, the next best step is to look at a higher time frame to get more clarification for trend direction and then momentum, and that's what we'll focus on. So yeah, it does kind of look like a bull flag there. So then let's look at the VIX. So I mean, this is pretty incredible that the VIX remains as elevated as it has this year. So we're really basing around 20. Long-term average of the VIX is, I think, like around 18 or something. And I consider anything over 20 to be, volatile conditions, particularly over 25. So you'll see a major support level at 25 on the VIX as well. That's why, often when the VIX is below 20 and volatility is low and the market's in a nice uptrend, when you do get a bit of a sell-off or a correction, or and then a resumption of the uptrend, you'll often see the VIX spike up into this 25 level and find resistance. And then as things get more unstable, you'll see it spend more time above 25. And then typically the next zone of resistance is between 35 and 40. So when you see it start to spike up into the 35 to 40 zone, markets are becoming a lot more unstable. There's a lot more fear and uncertainty, and not unusual to see on a shift from secular bull to secular bear market. So so far this year, this zone has resulted in really strong resistance. And I do a lot of options trading around the VIX personally, and different strategies, ratio back spreads, and selling premium. So a lot of times when I see the S&P hit a support level, or like it's doing over the past week or so, where it's consolidating around a support level, and I see the VIX spiking up into these resistance zones, I'll sell calls or set up a bear call spread. And so I've been doing that as the VIX trades up into this 35 to 40 zone, and then we see it retreat back down into 25. And so we broke 25, and so that's promising. If we can see the VIX continue to move lower back into the 20 zone, in conjunction with the S&P and NASDAQ breaking those resistance levels that I showed you, that's what we want to be watching near term over the next week or so. So I want to see the VIX continue to come down, and it did break support. And the VIX is a leading indicator. So it's taking all, the S&P 500 options and pricing in expected moves over the next 30 days. And so I use this as a leading indicator. So when I see the VIX break a support level, often it will do that, and certainly it's not a certainty. Since there are no certainties in trading, but if it does break a support level, it'll often do that before the S&P breaks a resistance level. So this might be our clue today, because we closed strongly below the 25 support level, that the S&P could break through that resistance zone that we mapped out a moment ago. And so that's what I'm kind of watching right now. And then if that happens again, we watch for the resistance level, the next resistance level we mapped out, and then we watch for the next support level on the VIX, which is around 20. You could get a little bit more granular and start looking for some finer support areas in here. There's one like kind of around 22 that you may also want to watch, but next major is 20. All right, so any questions on that, Richard?
Let's see, just a little quick comment from Keith. He was saying, with oil being at $120 a barrel, this market still seems awfully heavy. Would you kind of look at selling the rallies, or?
Yeah, I mean, I've really emphasized pretty much, I think, in all of our sessions this year that the bull market's over. This is whether we're in a technical bear market territory, which we have been on the NASDAQ, but found support on the S&P right around that peak to 20% peak to trough. To me, this is a bear market, and so in bear markets, you want to treat those generally opposite of a bull market, where the mantra has been buy the dips, right, for the last decade plus. And now it's to answer Keith, it's to me it's sell the rallies. I think just we're gonna have a hard time on a directional basis finding enough upward momentum, but not to say that you can't find long opportunities in a bear market. As I mentioned, there's still bear market rallies, but they tend to be shorter lived. It's just kind of the inverse or mirror of what happens in a bull market. You tend to get these pops that then find resistance and then sell off again. So they tend to trick a lot of people, but that's why it's so crucial to map these levels out. Be aware of where the buying and selling is taking place, and that's at horizontal support and resistance. And so map those out, keep them on your chart, and then correlate all of those levels to what's happening with the VIX, and you've got a huge edge. You're gonna know with a high degree of certainty ahead of most people, what is on a statistical basis, the higher probability of the market turning at a certain price point. So yeah, I think especially on the S&P, we just got so much overhead resistance where there's a lot of potential selling at those levels, that could occur at those levels. So again, I think if you watch that with the VIX, watch those levels with the VIX, it really gives you a clue. And I think even an advanced indication oftentimes with the VIX. And we'll talk a little bit about our momentum signals too, as we look at higher time frame charts, which can really be helpful to help identify trend and momentum shifts. So if we're in a downtrend and we get a bear market rally to the upside, look for our algorithmic momentum sell signals at those resistance levels. And then look for a bounce in the VIX off of support, like at the 20 level or at the 25 level. And those can be, when you find the confluence between all of those metrics or variables, then it's going to give you a pretty darn good edge. And then, of course, there's a lot more to it, structuring strategy and things around those technical analytics. But that's what we talk about in our sessions. So we can talk strategy as well if there are any questions there. So any others before I want to give Daniel some time to cover?
No, we're good.
Okay. Daniel, so I'm going to pass it over to you. So Daniel's going to talk about Specifically to Zillion, I know we have a lot of trade trend members on who use our signals, and as well as Zillion members on tonight. And one of the cool features we have built into Zillion is email alerts. So you can basically create custom watch lists and have any symbols in your watch list be, if there's like a pending buy or a pending sell signal, emailed to you when those occur, so you're not having to constantly check them. And it's something that needs to be configured within the dashboard, but he's going to kind of go over that. And then we'll continue with the session tonight. We'll open it up to Ticker Roundtable and start looking at some of these buy and sell signals across multiple time frames, and how to navigate consolidation on a time frame by using higher time frames. So Daniel, if you want to take it away, and I'm assuming you want to share your screen, is that right?
Yes, I would like to.
Okay. So I'm going to go ahead. I think I need to stop mine there.
All right. So can you see my screen, Jeff?
We got it.
Perfect. Okay. So yeah, let's cover a bunch of topics. So the first topic is, how can I configure email alerts for Zillion? So the first thing you need to know is that email alerts are by default disabled for everyone. So you really need to explicitly opt into email alerts. But luckily, this is very easy. All you need to do is you're going to go to the right top corner on this little user icon here. You click on it and go to Trade Alerts. And in there, whenever you see this toggle to the left, it means email alerts are disabled. You can also tell by this lower line here, select watch list is grayed out. So if you see it like this, it means you will not receive any alerts. So in order to opt in to alerts, you click on this toggle here. We go to the right-hand side, and it will also enable the lower line here. And the lower line is really the line where you can decide for which watch list do I want to receive my email alerts. So I have multiple watch lists in my account. For example, main watch list, my old watch list, and so forth. So I'm just going to pick main watch list. And all you need to do is you click done, and that's it. From this point on, you will receive email alerts. Typically around 7:50, 7:30 p.m. Eastern, you will receive an email with the latest updates about the symbols in your watch list, in the watch list that you have selected for your email alerts. And if you do, the email alerts will look as follows. So will go to my Gmail account. And if I just search for Zillion, and I encourage you to do the same thing. So search for Zillion, you will see emails such as this, Zillion Daily, and so forth. These are the email alerts that you will receive every single day. Yeah, at 9:30, sorry. So they arrive at 9:30 every day. And if you open them up, they will look as follows. So you will see this is a market update. You will see the date for which the alerts were generated. And you will also see for which watch list, that's the second component here, these alerts were generated for. Okay, so date and the watch list that is in place. And then the alerts start. We start by pending buy signals. So pending buy signals are these warnings ahead of time when a trade may take place. And as Jeff said, these can happen up to 3 days in advance. And what you will see for these, for pending buys, for example, you see the symbol name, the name of the instrument, the target entry price. This is the price for which, if it's a potential buy trade, for which your buy stop order should be placed. Yeah, if you're a broker, you will place a buy stop order for this price, 148.57, for example, for ABBV. And at the same time, you will also set your stop loss to this level here. Okay. In addition to this, you can also see how long has this pending buy been out there. In this case, it's been out there since yesterday, since 2 days. This is the signal duration here, and it's been generated for the aggressive mode. Yeah. And in addition, you can see, okay, for this mode, we had so far for long trades a long profit factor of 1.36. And as a reminder, a profit factor above 1 tends to indicate a potentially profitable setup. Yeah, and you can just go through this list here. Sometimes, I don't think there's one in here right now, you will see the same symbol listed twice for your alerts. So EBBV could be listed twice in a row, in this row and this row, but for different modes. So for example, there could be an alert triggered for the aggressive mode, but also for the same symbol in, let's say, moderate mode or conservative mode. Yeah, don't be surprised if you see this, because it's by design. And why did we do this? Because the profit factor and also signal duration, or even entry price and stop loss, may be potentially different depending on which mode in these signals have been triggered in. Okay, so don't be surprised for this. Okay, moving on. So we also have pending sells, same setup. So in this case, for sell trades, you can see all these sell trades here. Yeah, it's not surprisingly a lot of sell trades in this bear market. And here's just an example. Look at bio. Yeah, here we have bio listed twice in a row. And again, the reason is because in this case, the pending signal has been generated for both the moderate mode and the aggressive mode. Okay, so this is by design. All right, so moving forward, again, here's CLX, again, twice it's been generated for the same symbol for different modes. And look at the profit factor here for the sell side. There's a big difference. So for moderate, it's 1.34, whereas for aggressive, it's below 1. And for you, this is a very important criteria that, if these two coincide and they also happen for moderate, well, this could be an encouraging sign that this is potentially good setup. All right. So moving down, yes, you can see lots of potential sells. That's because my watch list is so big. So I had like literally hundreds of symbols on there. Okay, so these are the pending entries. Now, for the open trades, we also have tables. So we separate them out into buy trades and sell trades. And they're called active buys or active sells. And here you can see, okay, how long, which symbols are currently have an open trade. For example, Accenture has been long since 7 bars or 7 days, 7 trading days. The entry price was at 784. Now the stop loss has just been moved to 300. So you can already see we locked in quite a bit of profit on that trade, and the long profit factor for that trade was 1.62. Okay. And generally speaking, just as an observation, the longer a trade is open, typically the more profitable it gets because it doesn't get stopped out, just moves in the right direction. So if you just look by trade duration, you typically find some very profitable trades which have been open for quite some time. All right, so these are the open buy trades, and the same thing for open sell trades. If you do not see any sells, this is because Gmail, in my case, it crops or clips my message. If it gets too long, because we had too many symbols on there, actually cuts off the message. So what you want to do is to click on View Entire Message. Just like now, this will open up the entire email in a new tab. And then you have all the email content. So we have the buy trades here, and then we have the active buys, and below that, we just go down. The sells here. So active sells, again, same setup. Yeah, you see which symbols currently have a sell trade open, how long the trade has been open, and what was the profit factor for the short side. And of course, as you scroll down, you also see which trades have been closed. As the stop loss gets triggered, trades get closed out. You see all the closed trades here with the entry price and exit price. For example, this one here has been Best Buy, for example, slightly profitable, made 3 points, and so forth. So you can just look through these trades here, and the same for sell trades. And then last but not least, we also have scenarios where we had an entry warning or a pending entry, which was not triggered because it expired, because price did not hit our entry level. And these are also listed in these email alerts, of course, always for these symbols listed in your watch list. Okay, I hope this makes sense so far. If you do not see these email alerts coming in, the most likely reason why they didn't come in is because Gmail or whatever email provider you use has flagged them as potential spam. And what you want to do is to search for them in your spam folder, search for Zillion in here. And if you find them in your spam folder, make sure to mark them as not spam. And from that point on, they will be delivered straight to your inbox. Okay. Okay, so let's go back to Zillion. The next topic I would like to point out is, you can open, let's say, Netflix in your chart, it shows up, but for some reason, a symbol which you would expect to be available in your scanner does not show up in your scanner. So let's go here and let me just look for Netflix. It should be showing up because definitely Zillion is tracking Netflix, but it's not there. So if this happens to you, and I know this happens to quite a few users, the most likely reason is that you have a column filter enabled. So what is a column filter? Well, a column filter is an extra condition associated with any of these columns here, which acts as an additional filter. In this case, you can see this little greater than 1.5 sign here. It means that I have filtered all my columns to only show me symbols with a profit factor of greater than 1.5. And if this happens, then, well, in this case, Netflix is not one of those symbols. Netflix will not show up in this scanner. Okay. And you can also see that the filter is applied by taking out the search keyword here and going down. The filter is still here, but I just removed my search word here and go down to the end here. And you see, we're only seeing 304 entries out of 4,795. So 4,795 is the total amount of symbols currently tracked by Zillion, but we're only showing 304 of them. Okay. And if you see a discrepancy between all the available symbols and the ones that are actually being shown, it means a filter is enabled somehow. So let me just go back here and remove this filter. You can do this by clicking on this little arrow next to the number. And you're just going to go to no filter. Now it's removed. And then you would go down here and you see showing 1 to 20 out of 4,795 entries. So this, this situation where we only show a subset of the symbol is not enabled anymore. Okay, so this means there's no filter enabled. Another reason why Netflix, for example, may not show up, let me just test for Netflix. As you can see, if I type in Netflix, now of course it is there right here. Yeah. But let's say you can also filter by asset class. Up here, it's a similar scenario. You can have everything enabled or nothing. Let's say for some reason you only had FX and crypto enabled. Yeah, 2 out of 9 here. And you search for Netflix. Well, guess what? It will not show up because Netflix is not in either the crypto set or the FX set, obviously. So only when you enable all the symbols or whatever group Netflix is in, Netflix will actually show up, as you can see here. So this was a question commonly asked by users, why can they not find a particular symbol? And the answer is typically because some filter was enabled at the same time. Okay, so and the last item I'd like to cover is, we had a buy signal, let's say in a certain symbol a couple of days ago, but for some reason it does not show up under buys anymore. Okay, so you can just filter by buy entries here. See all the buy trades that we have. So we had a nice buy trade, let's say at just pick a good stock here, maybe this stock here. Yeah, so a nice buy trade down here. After it made a really nice move, and of course it will still show up. But sometimes you may have a buy signal down here, and you may think, okay, well, it should still show up because it was the most recent signal. It should still show up in my scanner as buy entry. But that's a misconception, because it's not enough just to be the most recent signal. There's another condition to this. It also needs to be still an active trade. So if that buy trade, for example, would have been closed out here or stopped out here, it came close, as you can see here, and we go flat, then for this symbol, CVET, it would not be listed anymore as an open buy entry because we already got stopped out. Okay, so if you filter by buy entries, then only the symbols which currently have an open trade on the long side will be shown. It's not enough that there was a buy signal, which was the most recent signal. If that trade got closed out, then this symbol will not be shown anymore in the scanner. Okay, so, and did I have one more item? Yes, one more item I had. And this is just something that dates back just a little bit. As you may remember, we have recently, or perhaps a month ago, switched from just a single watch list to a multiple watch list theme. And you may wonder, okay, what happened to my old watch list? Did it disappear? Is it somewhere available? No, it did not disappear. In fact, your old original watch list, which you couldn't even name, it always had a default name, it is still available. And in fact, it is now listed as my old watch list. That's where you find your original symbols in your original watch list. Okay, that's the default name. And of course, you can rename this watch list. Just clicking on the rename icon here. Or if you don't want it anymore, you can also simply delete this watch list. Okay, so Jeff, I think that's pretty much it. Are there any questions?
No, that was really helpful, Daniel. Thanks for going over that. I think the only question I'm seeing, Richard, let me know if there are any others, but Eric's asking if we can add the closing price to the, I'm assuming it's the email alert table.
I believe it's there. Oh, the current close price to any, to the pending list, for example, what's the current close price of the day?
Yeah.
Okay, yeah, that's a good suggestion. That's definitely something we could add. Mm-hmm.
Okay, great. Yeah, Larry's asking just how to create a watch list and add and delete symbols from the list. I don't know if you want to just show that real quick.
Yeah, it's actually quite easy. And there's various ways to do it. So one way to create a new watch list is to go on this little arrow next to your watch list drop down here. You click on it and go to a new watch list down at the bottom, which will open up a new dialog. You give it a name, say Larry watch list, whatever, for example. All right, so this will create that watch list. And once it's created, you get a little confirmation message up top here. And this watch list now has been created. It's also pre-selected here. So if you click on this watch list, Larry's watch list, you can click on it. And of course, by default, when you just create it, it is empty. So you don't see any symbols in here. So how can we add symbols to this watch list? Quite easy. So there's two ways to do it. The easiest way is to simply right-click with your mouse, right-click on a symbol, and there will be an option, add to Larry's watch list. So I can do this. You again get a confirmation here that this symbol now has been added to Larry's watch list. And if you switch over to Larry's watch list, you also see that this item is now available here. If you don't want this item anymore, you can again right-click on this item and just say remove from this watch list. As soon as you do this, it will be removed and you get a confirmation message as well. So this is one way to do it, by right-click and via the context menu. Another way to do it, which I prefer personally, is to simply drag. You hold your left mouse key down and you drag it up like this. I'm dragging it up to the top. And as soon as you start dragging, you see this little field opening up here, add to Larry watch list. This will occur as soon as I start dragging. And all you need to do is to move it up, keep your left mouse key down, move it all the way up to this field, to this drop area, and then release the left mouse key, and it will be added to the watch list this way. Yeah, it's super easy. You can just do it like this. See, just keep adding new symbols to these watch lists. And one more hint, as soon as a symbol has been added to a watch list, it is also displayed in bold in the scanner here. So you can see ALT, for example, it's slightly highlighted. That means it's been already added to the watch list. And if you now try to re-edit to the watch list, if you do a right click, you will not have this option anymore because it's already in there. Instead, you will have the option to remove it from the watch list. And if you try to drag it up to our drop area here, you will get a warning message here. Well, this symbol already exists in the watch list and therefore it has not been added twice to it. Okay, and one more handy thing, which is really cool. So let's say I'm interested in crypto trading. So all cryptos, let's say hypothetically, so I can select my crypto asset class here. And let's say I would like to add all my crypto symbols at once to the watch list instead of doing it one by one, just by dragging it up. What I can do is if you use Windows or Mac, there's a shortcut, a keyboard shortcut, which you can use, which on Windows is Control A. Yeah, so you can do Control A. I'm going to do it right now. And so as soon as I do it, you see all these rows highlighted here. That means everything is selected. What you can do now is you just drag it from anywhere in here, drag it all the way up to Larry watch list, and it will now add all these symbols, all these 12 or 14 symbols in here to this watch list at once. And this not only works if you just have symbols on just one page here, because we only had 14, but let's say we have FX and cryptos together. So now we have quite 27 symbols distributed on 2 different pages. See? So if I do Control A in here again, Control A, and drag them all up, I can add all 27 symbols at once to the watch list. And of course, I will get the little warning message here because I had already added my cryptos before. And these were not added twice. And one more thing, since I'm at the topic, I hope that's okay, Jeff.
Yep.
If you want to, if you use Windows, you might be used to it. If you just want to select maybe this one and this row here, maybe this row and this one. So you see, I only selected a subset of the items, but there's a multiple selection. And this can be done by holding your Shift key down. So I'm going to do it again. I'm holding my Shift key down first. So I'm pressing Shift on Windows. Then I select this row here. It highlights, but I keep my Shift key down. And maybe I go a bit further down to Litecoin here. And I do a left click again with my mouse. Click. And as you can see here, we now have a multiple selection of all these rows from the beginning to this one here to Litecoin. I can just drag these ones into my watch list. And one more thing, and then I'm done. Again, if you know Windows, you may know this already. If you hold down the Control key instead of the Shift key, you can also do multiple selection, but with gaps. So how this works, again, I'm going to press Control. So Control is pressed right now. Let's say I click on GBP CHF. It will select this row. Let's say now I select AUD NZD. I select this one, but you can see here there's a gap now. So AUD CHF is not selected because I'm using the Control key. You go to this one and this one, maybe this one, and so forth. So this is very easy for you to select multiple rows at once. And once they're selected, you can just drag them up again to your drop area here and add them to your watch list. Okay, any other questions, Jeff or Richard?
No, just got some comments saying thanks and makes sense. And yeah, thanks for clarifying all that, Daniel. It's really helpful to everybody, I'm sure. And just a reminder, guys, if you want to receive email alerts through Zillion, number one, you've got to enable that up at the top right corner of the dashboard. And you'll only receive the emailed alerts when there's a signal for a symbol that's in your watch list. So just make sure that, whatever you're keeping an eye on and potentially want to trade is in your watch list once you enable the email trade alerts. So thanks, Daniel. Really appreciate that. And it's very streamlined. I mean, it seems very easy and don't have to sit and manually sort through everything, which is great.
Yeah, exactly. Thanks.
So,
you're welcome, guys.
Thanks, Daniel. All right, guys. So hopefully that was helpful. I'm going to go ahead and share my screen back here. All right. I think Eric might have been Eric asked regarding the Divergence Cloud. Sometimes on the chart, when a cloud is fading, it might be a little bit difficult to tell whether the current bar or candle is still within the Divergence Cloud. So one way to verify that is in your scanner. So you can, like we were looking at the S&P being in a red Divergence Cloud, and one way to confirm that is to look in the scanner under the Divergence Cloud column. And so you'll see like the S&P is still in a Divergence Cloud for today's candle. If you see a dash there, then it's not in a Divergence Cloud, or if it's in a green Divergence Cloud, that would show up in the Divergence Cloud column. So just a way to confirm that. And of course, you can type your symbol or into the search box and find that symbol. It'll populate in your scanner, and then you could determine whether there's currently a Divergence Cloud in place on the chart if it's a little bit unclear visually. So thanks for asking that. I think it was Eric asked that. All right, so let's go ahead and open it up, Richard, to take a roundtable. I want to look at the symbols that people are tracking, following, or interested in, and then we'll do a little bit of time frame analysis using the signals and trend analysis and momentum and things. So if you guys want to go ahead and put some in, we'll take a look.
Eric, who was first? Google.
All right. Stalled on me.
Hey, Jeff, quick remark.
Yes.
If it does not load in TradingView, it's easier to load it in the scanner first and then click on there. That's a small hiccup we're working on right now. So just
gotcha.
look for Google there.
I haven't had that happen yet. So let's see.
That's a good use case your filter is on for the asset class filter.
There we go. Let's go to all. Okay. So
Top one.
yeah, we'll look at. All right. Let's let this come up, and then so there is a open buy signal on Google. Getting a little bit of the consolidation from what's kind of happening in the broader market. Let's zoom in here. This one, I like this buy signal because it came off of a support area. You can see a lot of consolidation back in February and March of last year that broke in the beginning of April. Obviously, shares took off with the broader markets and then sold off with the broader markets, came back down into that support area. And then the pending buy signal came in May 27th and triggered on, that was a Friday, triggered on Monday, the 31st. And so triggered entry, we can actually look on back here to see what that was. It was at 22.65 and some change. And we're up at the close today at 23.44. So this one still looks like it's got momentum. The red horizontal lines are your trailing stops. So those have been tightened up over the last few trading days. Most likely the algorithm picked up, the stall on the momentum and the sideways price action. And so then it tightens up the stop in case there's a reversal. But this is still an open active signal. So let's look at, and so this is actually a good case study because we're getting some sideways consolidation. So that's where we can then go up to higher timeframes to get a clearer picture of what's going on. And we also want to keep an eye on our selected time frame, in this case, the daily chart, where our resistance levels reside with a long directional bias or a buy signal in this case. So if we look at overhead resistance, I'm just kind of eyeballing this. I mean, I see the strongest one I see is up here right around 2,500. You can see that that was support from early this year, and then also middle of last year. So that's a strong support level that now serves as resistance. But we still have a little bit of weaker resistance that resides below. Let's see. I see some here kind of right around looks like 2450 and 2400. Okay, so those are kind of the most significant resistance levels I see here. And of course, as I mentioned, over the last 5 or 6 trading days, this has been a nice move off this prior support level and a accurate buy signal. But things are kind of starting to stall out. We're getting a little bit of sideways movement here. And the strong directional momentum, upside momentum is kind of slowing down. And the good news is the algorithm picked that up and tightened the stop up from down around 2100, it looks like, to just a little above where the entry would have been on this signal. So if we're in a trade off this signal, a long position, and we've got our resistance levels mapped out, but we're getting some price consolidation, we may want a clearer picture if we intend to hold the trade, longer, or maybe look at potentially starting to scale out of a position, but holding on to some, more medium to long term, that type of scenario. This is where it can become useful to go up to a higher time frame when you start to see, less any sort of chop or whipsawing, or less directional movement on any particular time frame. In this case, the daily chart. So, then what you can do, and I'm just going to go over to clear all this out. I'm actually going to go over to other charts here because I want to show something else in conjunction with this. And TradingView charts, I think there might be a plugin, but I don't have it loaded. So implied volatility. So we're going to look at a higher time frame, or even two higher time frames, and look to see what implied volatility is doing in conjunction with the price movement. So right now on the daily chart, we see an upward trending implied volatility chart as the stock is trending down, right? So we get kind of this flag pattern or divergence between price and momentum, and implied volatility. And of course, implied volatility rises as share price falls generally. So we would expect to see that. So if we start to encounter resistance, in this case on the daily chart, and we want to answer the question, do I expect in this case, Alphabet or whatever the stock I'm looking at is, or symbol, if you're trading outside of the stock market, then do I expect it to break through resistance and continue to move higher? Well, that's where we're going to look at higher time frame charts and then look at that in conjunction with implied volatility, because I want to see implied volatility start to come down as the price breaks a resistance level, and it's in conjunction with the higher time frame. So what I would want to see here with Alphabet is I want to see implied volatility break this trend line and move lower. Okay. I want to see the stock break the resistance levels we just mapped and move higher. And I want to make sure that it's in line with the higher time frame chart. So right now we're looking at a daily chart. So we can go up to a weekly, and you can even keep your horizontal levels that you mapped on the daily chart up, and you can see if they coincide to any major levels on the weekly chart or a monthly chart, because you'll have a bigger picture. Obviously, there's the prices are consolidated in longer time frames are consolidated into one candle, so you can more easily see how significant these levels are, whether they go back further. And we were looking at 2,400, so I do see from back in April of 2021 a little bit of resistance there, but certainly this 2,500 level, as we looked at on the daily chart, is strong. So that, to me, that 2,500 level is as we saw on the daily chart, our major resistance to encounter. So as we look at trend and momentum, and let me actually just add trade trend on here so we can see it. So on the weekly, we had a sell signal here back of the week of April 11th, and worked out really nicely. But this week, the stock broke through the trailing stop level, and often when we see that after a sustained open signal, in this case to the downside, and we get a break of the trailing stop level, that tells us a couple things. So one, momentum has a higher probability of shifting in the other direction, in this case to the upside. And likely, at least for the near term, that prior trend, in this case, a downward trend or downward momentum, is over, for now. And there could be a continuation, but this is what I would be looking for on a higher time frame chart. And then interestingly, we're actually getting a pending buy signal on the weekly chart for Alphabet, but it's not confirmed until Friday. But this is one I would watch. So I want to see, is this potential trend reversal, going to grow legs and continue. So this is going to be something I'm watching. And then also, where did this move come from? So I want to look for support on the higher time frame as well. And there is strong support around the 2100 to 2000 zone. And so that gives me more, confirmation that if we get through a resistance level and implied volatility comes down, because we also have the upward sloping implied volatility trend line on the weekly chart. If I can see that also drop below, and then we've got this major resistance zone, support zone, right? So there's the 2100 rejection. Back in early 2021, we had, look at all that consolidation right there on the weekly chart that eventually resulted in a huge breakout. Remember at the start of our session when I mentioned that if you see a lot of price consolidation at a support level or a resistance level, and then it eventually makes the directional break, in this case, it did so to the upside, you tend to get bigger sustained moves. So there was a lot of price consolidation early last year in Alphabet that resulted in a big break. And then we came back down and retested the level a couple of weeks ago, and we're moving up off of it. And we've got, again, some significant overhead resistance at 2,500, but this is a weekly chart. So remember that, this took this rejection off this 2,100 support zone. We're now in week 3 of that. So if I look at the kind of look at the time frame, put it in a context of the move off that level, within the next week or two, we can just kind of visualize this, more of an art than a science. We have a good probability of coming up into that 2,500 level and finding resistance there. But again, with the caveat, I need to see implied volatility break this trend line. I need to see this pending buy on the weekly chart be confirmed. So again, that happens at the end of the week every Friday. If this arrow stays, or the white diamond on your Zillion chart, that's a confirmed buy. And while the stock could well come up to 2,500 this week, if it doesn't, then I've got some room, before I hit overhead resistance. And then on the daily chart, there's already an open buy signal. So those are the things, I would look at. And then we can let's even look at the monthly chart real quick and see what it's telling us. So what I see is last month in May, big indecision candle, right? So wide range, a lot of volatility along with the broader markets. IV, implied volatility, high on a monthly basis. So we're at highs, around levels from back here. And it's really good to look at IV implied volatility on a monthly chart too, because right around the 40% level, major resistance. So you see how implied volatility has resisted that 40% level and moved down. And then of course, what happens, the stock moves up. So again, there's still an upward trend line on IV, but it's in kind of a wedge here. So if this can break this trend line on the monthly, we've got indecision here on this candle, open near the close. Sorry, close near the open. And then we're starting to move up. Again, watch the resistance, 2,500. There it is. You can see on a monthly basis how strong that was. See how it becomes a lot clearer when we look at the higher time frame. It's easier to see this resistance than perhaps it was on a daily chart. And there's that was actually support, sorry, over a few months. And then there's the resistance. So it broke and then became resistance. So 2,500 is going to continue to be major resistance until the stock can break through it, and then it would serve as support. So a bit of a tricky situation right now, but the weekly and monthly timeframes give me a bit of a clearer picture of what to look out for, and make it a little bit easier to see the levels. And then, you know, if I'm looking at that buy signal on the daily chart, is it coinciding with what's happening on the weekly and monthly? It certainly did when that buy signal came in on the daily chart. We found that support zone between 2,000 and 2,100, and we got to move off. We get indecision, and then we've got positive price momentum with IV, implied volatility, hitting a resistance zone and starting to drop back down. So that was a good case study, kind of to demonstrate, I think, the importance of the higher time frames, looking at implied volatility with these levels. And then if you're having any trouble mapping out the support and resistance, try it on the weekly and monthly chart, you know, or if you're doing it, because the smaller time frame, or the smaller you go on time frame, it tends to be a little trickier to find some of these levels, because you get, you know, you tend to get a little bit more chop on smaller time frames. So try going up to a higher time frame. If you're trading off a 30-minute chart, try going to an hour, 4 hour, or if you're trading off a daily, look at the weekly and monthly on those. So that was a good one. Let's take another, Richard.
All right, let's look at ABBV.
AbbVie.
Yeah.
All right. That is a pharmaceutical stock, I believe. All right, so we're on the monthly. Let's actually start on the monthly. There was a monthly buy. So if we were looking at taking, trend and momentum buy signals on a daily chart, we see that there's an open one from back in February on AbbVie, and it came in off a major support. So you can see, and we'll get down to the daily chart in a second, but see resistance there, broke in December last year. There's the pending buy. There's the trigger. So this one triggered the next month, came through, hit the entry price, had a nice move up, bearish rejection here a couple months ago, and then pending sell, but the buy is still open. So trailing stop is actually from last month, a little below the 140 level. This one's not confirmed until end of June. So if AbbVie comes down and breaks this trailing stop, then that sell signal will trigger, and this long buy signal on the monthly will be over. But right now the trend's still strong. It's up and we're above a strong support level. Momentum is positive. There's an open buy signal in the monthly. So let's take a look at what's happening on the weekly chart and see if it coincides. So we have some conflict on the weekly. And so sell signal from back on week of April 11th. So we have an open sell on the weekly. So we tend to give more weight to the higher time frame. So this could just be a bit of a retracement within the broader uptrend, And the monthly long signal, may very well continue. And this this little short trade here, which is working out nicely so far, potentially could get stopped out and reversed. So this is interesting. So we see a bit of conflict here between the weekly and the monthly. So let's see what's happening on the daily chart. All right, so nice sell signal here. And this, again, would have been in line with the weekly one we just looked at, right? Because this one came in May 18th, but it was stopped out today. So it hit the trailing stop. There was a pending buy 2 days ago, or two trading days ago. I guess that was June 3rd. Didn't trigger yesterday, hit the entry trigger today. So interesting here. So we've got a pending buy, a triggered entry, and let's look. I see something here that I'm actually going to run back over to the monthly in a second, but we've got strong support. That's good. And we've got implied volatility dropping. Okay, so it was trending up. And then we got a break of that upward trend back in mid-May. And then IV starts dropping and trending down. That's a good sign for this buy signal. So see how I'm analyzing the confluence here between horizontal support. So these are demand zones where buyers are coming in to the market. We've got implied volatility, and forward-looking inversely correlated indicator that when it drops, the share price tends to either stabilize or go up, and when it rises, the share price tends to drop. So see, as this uptrend in the implied volatility in April and May occurred, the stock dropped. So so as I see this break, this trend line on implied volatility, as IV comes down, we get a buy signal, we're off support. And on the higher time frame monthly chart, we're in an open triggered buy signal. So when I'm compiling all this information to make a trading decision, the one conflict I found was on the weekly chart. So what I want to do, maybe if I'm considering a trade, is wait, or this one hit the entry trigger already, but if I want to jump in it because it's not high above it, I may want to wait and see the weekly break the next trailing stop level for added confirmation. I want to look at the monthly real quick again. Implied volatility. Just to confirm. Yep. So you'll see here that implied volatility has broken. So it's kind of more of a zone, but I'll draw this as a zone. Okay, so we had resistance around 32.5, and then 30. So those are my resistance zones. So we've broken through support now, because those became support once they were broken back here in mid-April. So my next level of support and implied volatility is not too far below on the monthly. So I'm going to want to monitor that if I get into a long position. But the support zone is kind of between looks like 23 and 26%. So that could be a turning point for this long signal. But there's a lot of confluence to the long side with a little bit of retracement in that weekly sell signal. So this is a really good one too. But you can see that it provides a lot of clarity when you look at the higher time frame to see what's going on, how strong is the momentum, is the stock in terms of its range. So for a long trade, that would be the low, close to a trailing stop level, because generally, as we get closer to a trailing stop on an open signal, that's telling us, number one, the momentum is stalling a little bit, but price is still above, so still positive momentum. But the closer it gets, the higher the probability is of a trend reversal or momentum reversal. So we want to see these move up off these trailing stop levels, and we want to see IV implied volatility drop, and we want to see this occur in conjunction across at least 2 time frames, 3 even better. But we give more weight to the higher time frame. So the monthly is an open long signal, the daily, and then a little bit of conflict there on the weekly. But overall, painting a picture of this scenario with AbbVie is that the momentum is to the upside, the trend is up, and until one of those criteria that we talked about breaks or changes, that would be our directional bias. So another good one to look at. Let's take one more.
Amazon.
All right. This is a crazy monthly one to look at, right? Yeah. So obviously,
That's my electric bill.
need a drum, a hi-hat there. Sorry, I got sidetracked. So let's look at a weekly. All right. So once again, the weekly makes it very easy to spot support. Oops, sorry about that. Right. So very strong support at 100. So can you guys see that? Remember, once this is resistance back in July of, what was that, 2018? Once it breaks, then it becomes support. Look, it took 2.5 years for it to come back down and retest that level. But it did it a few weeks ago. This is again a weekly chart. And while there was a very nice sell signal that came right down in support and then reversed on this trailing stop, we broke through, and then not a lot of overhead resistance until we get up to. So I see really strong overhead resistance around 145 roughly. We got a little bit around 135. Okay, so those are probably the 2 resistance levels I'd watch. Again, this is on a weekly chart, so when I'm looking at a weekly, my time horizon is more 3 to 6 months. If I'm looking at a daily, it might be more like a matter of weeks to a month or 2. So that's kind of how my time horizon based on analyzing those particular time frames, daily and weekly. So then let's look at the daily chart. So again, sell signal taken out on the weekly, nice sell signal, and then it happened off support. So what I'd want to be looking for on the daily is a buy signal, right? Why? Because the sell signal was taken out. We had a nice one, big move down into strong support around 100, took out the trailing stop on the sell signal. So what's happening on the daily time frame? Okay, so there's support. We did get a really good buy signal. Unfortunately, the stock moved sideways for too long and the algorithm trailed the stop up and it basically went nowhere. Haven't gotten another one. This is where I really love options, is using directional options spreads and strategies like ratio back spreads off buy signals off the off major support areas when IV is coming down, because then I don't have to be so precise with trailing stops and things. I can just put the trade on within my risk threshold and let it run. But we did get a nice double bottom here on the daily chart, but still no buy signal. Let's see, and then there's our resistance at 135. So we spotted that on the weekly chart. Notice the gap here on earnings. Let's see here. So we got this gap on earnings, and then we came back up to that level. So I'm going to call resistance at 132 because we did get rejection yesterday from that level. And that was where the gap after earnings, where the market hit the high that day, post earnings. So we got some resistance to contend with on the daily, and we don't have a buy signal yet. So if I'm going to trade off the daily chart, I want to see this resistance zone break to the upside. And then I want to wait for a buy signal off the support. And that would be in line with what I see on the weekly chart. So a little premature for me to jump in on the daily because of the resistance. But it could happen soon because the implied volatility trend line is broken from back in late March. And we're starting to move lower. So this is one like I would put in my watch list in Zillion and, wait for the email signal to come in on a buy and make sure that we got above this resistance zone on the daily chart, and implied volatilities continue to move down. We've got support and implied volatility support around 32, 33%. So as long as it hasn't reached that level by then, and we break the resistance and it continues to be in line with the weekly chart, that's everything lines up for me on this, but still a little premature on the daily. So another good one. So hopefully you guys see how, analyzing multiple time frames can give us a clear picture of trend direction, momentum, and where support and resistance resides. Often it can be easier to spot on the higher time frame. And then we want to make sure that, everything lines up as well as it can. And if generally we take the trade off the lower time frame, so if you're trading off a daily chart, your trading decision ultimately would be off the daily chart, but we want it to be in line with the higher time frames, and typically two higher time frames. So I want to look, taking trades off a daily chart, I want to look at the weekly and the monthly. Thanks for sharing those symbols, guys. Those were great examples that demonstrate that. And my voice is finally starting to go out. Usually does this right at the end of the day. So good timing. So let's wrap up with any Q&A, any questions you guys have. Be happy to answer those. And we'll wrap up for the night.
I think we're good. People just wanted to see some of those analyses, but it's like you get everything knocked out. So
cool. Hey, thanks, Raju. Yeah, sorry we didn't look at Twitter. Remind me next week. We'll look at that one too. Thanks, Ed. Thanks, Jose. Thanks, Moshi. Man, Moshi is dedicated. I think he's on every one of our live sessions.
Moshi's awesome.
Yeah, that's awesome. All right, guys. Thanks so much. Well, have a great rest of the trading week. If anything comes up or you guys have questions, shoot us an email, support@altostrading.com. And man, my voice is almost really gone. We'll see you guys all next Tuesday. Have a great rest of the week and a great weekend.